Hello, Mark Sturdy here with a brief extract from our weekly research from 7 Days Ahead. Looking first at our summary page, you'll see that we have two firm convictions, which remains bullish of the sterling against the euro in all time frames. And we remain bearish of gold, and I thought I'd like to revisit. I know we've talked about gold before. It remains bearish, and I'd like to revisit that and emphasize the strength of our feeling and how it arose. The long-term monthly chart in the gold is one of skepticism about whether gold can sustain levels above 1900 or so. It's failed once, twice, and we think it is drifting down to fail again from these heady heights of $1,900, $2,000 an ounce. This is the October contract, and that shows the unlikelihood, in my view, in the very long term of it sustaining these levels. And here is the medium term, as it were, the underlying rationale for our bearishness, which is the completion of a head and shoulders reversal. The market's paused, has completed 3 weeks ago, it completed the pattern, shoulder, head, shoulder, calling the market down to these prior lows around 1700. It's paused once, it's had 3 weeks, this is the third week beneath the neckline. It has rallied to the neckline, should be good resistance there. Were it to break through on the week and close above it on the week, that would negate our positive stance on a bearish gold situation. But for the moment, it remains beneath the neckline, and we think the implications of that head and shoulders remain intact. Here is the rally over the last 2 weeks. There is the breakdown, and this is not without merit. It has rallied up, and these two prior lows should have been a band of resistance, leaving aside the existence of a neckline just above this market, and it has rallied through it, which is impressive. Whether it can be sustained or not, we shall have to wait and see. So the close on the week will be the critical test of our position. Close above this neckline, as I say, at current levels, would be poor for our situation. But for the moment, the bearishness of gold remains intact, long and medium term especially. Thanks very much.